All right, good morning, everyone. It is 7:11 in the morning of January 26th, 2023, and this is my pre-market strategy session. The title of today's video is QQQ, I'm still bullish for the short term. And basically what we've got going on here, and just sort of the first thing is that after having spent some time, the relative strength index down here. Oh, let's see if I can do that better. Let's get the whole, there we go. So after the relative strength index, this is on the daily chart here, it bounced off the bottom end there, crept its way, up to, over at 59, then took a dip, and is now trying to creep its way back into the overbought zone here. Somewhat sort of like, what we had here, went from oversold, to overbought. And so that's generally, it's not going to go up in a straight line, but generally speaking, for the short term, I'm bullish. And that's basically about it. There are a couple of other things. January, February, and March tend to be bullish months in the year. We've got a VIX that is trying to break down. So we've got this 19.12 that was put in as a low over here on August the 12th. Technically speaking, it is a higher low from what was put in April, but now we came down and we're starting to break down below this. So this on the 2nd of December is it's a lower low. It closed below 1912 on the VIX. Let's see, it closed at 1907. So very, very small lower close, but we are starting to get lower closes on the VIX. There's another one that happened back here on Friday the 13th. It closed at 18.34. And so VIX breaking down is encouraging. As volatility kind of settles down, even if it's going to settle down into the upper teens for a little bit, that is still bullish for the stock indices. And so, that's where we are, there's a lot, let me go back to the Qs here. And so you can actually kind of see that where we are in price right now has let's see, what is this? Going back to May of 2022. So for, what was that, 5, 7, so 8 months, even though we've gone, a bit above, quite a bit actually above back here in August, above this range. That's kind of where we are right now. So, it's going to do one of two things eventually after it's done moving sideways. And there's quite a bit of overhead resistance right here, too. So let's just kind of look here real quick. I'm going to get rid of that gap. These two yellow lines were a gap that were put in between the 14th and the 15th of January, I think, or is it December? December. So it came back to fill that gap. There was a technical gap right in there that it has come back to fill, so we can get rid of that. But I mean, there are tons of levels right in here that are support and resistance. They're just all over the place throughout the sort of recent history here. I mean, it's just, you can just sit here and fill it up with dotted lines as to what price levels are what and so on. I mean, and it's just a mess. I mean, you see there's support and resistance. I mean, I could do this all day, right? So there's really kind of nothing to go on right there with all the support and resistance. So it's better to just kind of take a look at the bigger picture. A couple things for the bigger picture is this rise in the relative strength index is still a lower high. So I want to see how high it gets. I'd like to see how high price gets when this relative strength index does go over 70 into overbought. And during rallies or even during bear markets, the relative strength index can get buried and then stay low for a considerable amount of time. The same thing's true with the rallies. If you look back here at the relative strength index, there are periods where it can just kind of stay above during the bull markets. The relative strength index will stay above overbought and just kind of hang out there, drop down a little bit and stay above again. And so in the bear market moves tend to be rather short and sharp. They don't hang around too much. But yeah, so even though we are headed toward what I think is going to wind up being a move to the top end of the relative strength index, it is going to be a little bit of in my opinion, once this thing starts going into overbought, I think it is still going to be, I don't know if you want to call it a lower high, but a high that's still stuck in that range. So we should have a few days here where we see this sort of up move play out. Then there's a ton of resistance, like I was drawing a minute ago. There's just a ton of technical resistance in this area, and foremost is this big support and resistance line. My support and resistance line is a little different from most people's support and resistance line right here. I'm sticking with it. I think a break above this resistance line will get us a short-term burst at least, and then most likely a back test to that line. If we can get up above it, up above this upper support and resistance line enough for the relative strength to come back down and retest the top of it and then take off again, then we should be good. That is that, it goes, so the relative strength goes into overbought, comes out of overbought, retests the back end, the top of the support and resistance line, and then relative strength comes back up toward overbought again, then we ought to see a rather decently sustained bull move right here. And it would be nice to see the VIX stay down below 20 for an extended period of time. That would kind of give us some runway to just kind of have a climbing the wall of worry, as it's called, to kind of do something like this. How's that for technical analysis? But yeah, so I'm bullish in the short term. I think we have somewhere around 6 months, give or take. It could be 6 to 9 months, something like that, until we see the 10-year, 2-year start to normalize again. And even though the 10-year, 2-year is inverted, things can be bullish on the 10-year, 2-year as it's inverted. Or I should say, the equity markets can be bullish while the 10-year, 2-year is inverted. It's not until the 10-year, 2-year starts to normalize again that I think we see the next big leg down on the equity markets. And there's some time to go in that. So, really, for the next few months, I'd say, I don't know. Really, actually, yeah, somewhere around 6 months. Wouldn't be surprised to see the Qs start to, really kind of be bullish. But then there is going to be a turnaround at some point once this yield curve starts to normalize again. The dollar is behaving well here. A breakdown, the weaker dollar is better for markets. It's better for, I should say, risk assets, stocks. 10-year, 2-year, the VIX, the dollar's behaving well. I think gold here, let's go, let me find gold. It's my opinion that this chart in gold, this is a short-term rally in gold. It's been a nice 3-month run. I think it's pretty much, it's getting close to playing itself out. I would be highly surprised to see gold make it past this 2089. That would be an extremely unusual move, in my opinion. I think I think we're headed to the tail end of this gold rally, and for the short term, certainly, and we're headed back down pretty soon. Yeah, that's the morning strategy. So today, again, I had a pretty decent day trading yesterday. I did right after I got done with my market strategy session yesterday. Wound up jumping into a trade because the relative strength index on the 10-minute here yesterday, you can see, popped up out of oversold at the same time that the 10-minute on the VIX started popping up out of overbought. Or started dropping down out of overbought. Sorry, right here yesterday, roughly the same time. And so I had a decent day yesterday. It was not bad, you know. It's nice to make money, and it worked out. It was, you know, the same old strategy I've been using now for quite a long time, and it's really kind of playing out nicely. So it's the same thing I'll be looking for today. If the VIX can get up into overbought and then curl over and come out of overbought at the same time the Qs are coming out of oversold, then I'll have a trade on my hands to the long side. You know, it's hard to say. There's a lot of overhead resistance in this area. I mean, you can see all three here. There's just all this sort of muddled price action in here, you know, and there we are. We're back in this range again. You know, we're back in that range. And so for the short term, I'm just trading the chart that's in front of me, the relative strength index. When those two line up on the VIX and on the Qs, then I'll have either a long trade or a short trade, depending on, you know, and I'm willing to go either direction today. I think, you know, there's a lot of overhead resistance right here. Personally, I think we break out eventually. But then also, you know, there's a case to be made for going both directions. And so I'll just trade the chart that's in front of me. All right, everybody, good luck out there. Keep your risks tight. Click like, share, subscribe, leave a comment, tap the bell. Thanks for tuning in, and I will see you at tomorrow morning's strategy session. I am out.